3, 1. Welcome, and good evening, everybody. Happy Sunday. And let's just dive right into it. So, based off the last few weeks, yes, trend has been exceptionally bullish, hands down. Tech has been strong, bottomed around 260. What is that? 260. What is that? 268, 258. We got two levels here. Let me just remove one, hide the curve. There we go, 265.09. So right around there. Then we broke out above this key level here at 339.94. Okay, so this purple line is, well, pink line was very important. I had created that, but I have not been watching QQ as I should have been. I've been focused on basically trading banks, looking at URI, XLF, and CS, of course. And those, we're going to get to those as well, because I did not expect that Friday. Kind of did, but I didn't in a sense. They definitely bottomed, but that gap up was something else. Well, we're going to get into that. But as you can see here on this QQ4D chart, we have time extensions. We have two different time extensions. Each time extension shows a significant price change and how price reacts to each time extension. So based off the most current time extension here, 417, the next one is around 721. So that's July 21st. That is a Friday. That is an expiry. That is a monthly expiry at that. So we want to keep that in mind too, going into that, because usually there's always going to be a price shift. So based off the trend line that I drew here, it's definitely a nice flag. It's a nice flag. We broke out above it. That's why I created this line here. Let me just edit this. Show price on the right so you can see that level, 339.73. So when price, we're looking for an extension to around 371.63, 363.18. So in between here, I'm going to show you guys. Got my drawing tools. So these two prices right here are going to be very important going into next week. Well, not next week, going into 721. So July 21st, those are going to be very important. And we're going to have this trend line here that is going to be, oops, sorry. I don't know why this is doing that. Give me 1 second. There we go. Oh, I was using a stamp. Sorry about that. So this is our focus. I don't know why my drawing tools are so thick. Give me 1 second, because I never did this before. Yeah, it was never this thick. Give me a second. Let's change this format. Here we go. All right, much better. Okay, so this is going to be what we're watching. 721. We're going to be looking at between 371.63 and 363.18. Currently, we have resistance at 356.95. So this is going to be very important. We're going to be using that 339.73 level, which is our breakout level, as a new support area. So trend's been long since we bottomed here. Stat 265.09. That was basically beginning of the year. Then we created a flag around there, bounced off that 286.88, broke out above that, hit our double lines of 302.72 and 306.21. And then we broke above that, started riding the 14 SMA straight up. Now we want to see how price reacts into this 721.23 area. Let's look at this weekly chart now. So the interesting part about this weekly chart, we have an inverted hammer in a sense. So with this hammer here, it's going to be pretty tricky because we closed what, 354.65. We closed inside between 356.95 and 349.61, right? So let me get that up here. This is going to be our key range this week. We want to see how price reacts. Any close below 349.61, that sends us right back down to 339.73. That's going to be our new support area. We want to watch that area to continue staying long. But this hammer that we had on the weekly close, it's a very strong hammer. We want to see how price reacts. So if price, the close, let's do this. Give me one second. Zoom in real quick. Here we go. And like I always tell you guys, I like to create levels at important prices. So with that being said, I want to use the opening price for this candle for last week's candle. That's going to be 352.34. Because this is the level where we want to see if we open below this level, we already have an idea what's to come from that. So let me clean this up. I'm cleaning that up. Let me just give you a fresh chart. Create a new drawing chart. There we go. Nice and clean. No lines, no levels, just moving averages, 14 and 30 SMA, no Celts. Keep it basic. All-time high is 408.71. So like I always like to do, we're going to draw levels off of that. We're going to use all-time highs. We're going to duplicate this level. We're going to drop that within the frame that we have here. We're just going to use this low of 254.71. We're going to extend this to the right. We're going to extend that high to the right as well. So in this case, what I like to do all the time, since that was a bottom there, I'm going to bring in a retracement. As you can see where the retracement ended up, how the levels worked out, that 350.09, that was key, right? Now, next up, what I like to do also, because I like to play around with it. So I'm actually going to bring the high of this retracement down to match it up with the high of 401.71. We're going to let that settle. There we go. Now you can see that 357.36 shows there. So another thing I'm big on, I like to focus on opening and closing candles. I don't care about wicks. I don't care about highs. I don't care about lows. I like to focus on the body of the candle because that's the most important. That's the most important when it comes to candle reading. Those ranges are key. So with that being said, we're going to focus on last week's opening candle, 352.48. Well, technically it's actually, the opening is 352.71. So we can just adjust that. Go. So this week, we're going to focus on that right now. That's going to be our focus for this week. That's level 352.71. They got the daily chart versus the weekly. We're a bit extended from the 14 and 30 SMA. So that is very concerning to me. So we definitely are Gonna get a pullback soon if that doesn't start this week. Using 352.71. We got that 14 SMA vacuum down. We got the 30 SMA vacuum down also. And as history repeats when it comes to moving averages, you go back when you see the price is overextended. What happens? It tends to come back down. Always and test. Sometimes it breaks down, sometimes it just bounces. But we are fully extended here on the 14 and the 30. We tested the 14 back in 524. From there, we just continued higher. I don't use RSIs. Haven't used those in a long time. It's no point for me to use those. It's all levels, moving averages. If you want to invert the chart, you can invert it as well. But for me, this week, key is going to be 352.71. Based off how futures are looking, we're gapping down. A weekly close below 352.71, we on target for this 14 SMA. Not much of any gaps to fill on the daily chart. So let's skim through. Let's go to our 2D. And if you look at the VP indicator below, we open that up for you, starting to turn down. That's volume price indicator. Showing some weakness up here too. And this is actually an interesting point on the 2D chart. If you look across, if I bring this straight across, let me do extend to the left, okay? Zoom in. I'm gonna show you right now. So that 357.36, I mean, we definitely can see that this week. That is a double top area. Let me highlight for you guys. Right in here. This is going to be very interesting. Plus, we have a gap zone right around here. What is that? 360.17. Based off how things have been pushing, anything is possible. We're going to move over to the 3D. I like to skim between the 1 to 4D all the time. So this is the 3-day. That gap still shows within the 3-day, 4-day. There's a gap that filled here as well on the 3-day. I'm going to highlight that for us as well. This is also a gap. Why it's not sticking. There you go. That's also a gap area, but let me just make a level there to help. Just duplicate here. So key levels going into the next 2 weeks are 352.71, 347.86. Very important. Still very extended from the 30 SMA. Last time we tested the 30 SMA was 313. So that was in March. And usually it takes if I like to go, all right, so another thing I like to do when I'm looking at charts, and I'm going to do this with you guys right now, because this is exactly where we are. So not even looking at the chart, look at this. Let's pay attention to this VPN indicator. I mess around with a lot of things. I even add retracements to my VPN because they do line up. It's pretty interesting how it works. This is something I've been working on for a while. Still tweaking it. Still have a lot to do. A lot to learn, a lot to tweak. when the VPN, when this gets around 2558, which is about high, where is it at right now? This is a 3-day, so it definitely varies on the time frame you are on. So I'm gonna give you a 4D. Just look how extended the purple line and the red line are from each other versus over here. Let me show you. Pay attention to this. Before they touch. This is exactly how long it took for them to touch. Activate after they crossed. So from cross to cross. So here to here. I'm going to duplicate that. Range is not going to be exactly the same, but this is basically me showing you how long it took before they crossed. So my guess is once this VPN gets to 2558, we should see the purple line catch up. And another thing that, I mean, I don't know if many people pay attention to on mock, which is market on close. You see like 1.4 billion to buy or 2.3 billion to sell. People really think it's a lot of buying going on. The buying that's going on right now is retail. Institutions are selling because we're at a very important price point. This gap area, let me just fix this up here. I want to bring this all the way across because this is a whole gap area here. Clean this off. Between 357 and 352.71. There's a lot of congestion here. Gap area that's been filled. And the fact that we broke down from this area, we broke above. This had became a support in 2020. Then in 2021, it became a resistance. (2022) remained a resistance. 2023 still a resistance until further notice. Let's look at the monthly. The monthly is very strong too. And the crazy part about it is the month just started. 1430 crossed. Well, they actually didn't cross. They actually crossed down, but they didn't cross yet. 14 is actually curving towards the 30 SMA. So that's something we have to keep in mind. And then you got your quarterlies too. Got to go through those as well. This is our quarterly for QQ. Vicious. I mean, the structure alone, just off the SMAs, is pretty interesting. It's kind of funny when you look at it. But the setup was there for a nice box on the quarterly from October to the first quarter. Now we're in the second quarter. And this monthly candle is going to be pretty interesting. The fact is, I wish there was a way I can do a bi-quarterly chart, because a bi-quarterly chart, I want to basically go over this right here. Let me clear this up. I don't need these levels. Get rid of this. I just want to point out a lot of different things. I want to point out this candle here. This candle, I definitely want to focus on that one right now. Still in this range. Bottomed at 254.71. This is the range I really want to focus on. So we're going to start. This is where everything gets interesting here. So the opening of April to the closing of 2022 quarterly, we want to focus on that. So that's 362.64. Is it too late to be bullish? Not too late to be bullish, or in a sense, long. But the long confirms above 362.64 on the quarterly. I want to pay attention to any type of rejection at that 362.64 area, because that's very important. We're still inside this candle here. And if I can get a buy quarterly, definitely going to go over that. I'm going to go back down to the weekly. Just simple support and resistances. Focus on gap areas as always. Then I'll bring back our retracement just to make sure that it lines up. So we got our pink line here that we're going to name a gap. That's a focus. And this one as well. I'm going to drop down to the 4-hour. Now we look for inconsistencies within candles, gaps, exhaustions. Past peaks. The VPN is very strong here. And as you can see, the lines within the VPN are retracements as well. Bounce off that 25.58. See, but this is a 4-hour versus a quarterly or 3-day. A 3-day, we're still at 1760. But on the 4-hour, we're at 25.58. So the VPN is very hot right now. We'll remove that study so I can have a bigger picture. There we go. So for me going into this week, my main focus is going to be 357.15 and that 352 area that we spoke about. For me, QQ is a one and done trade. That's why I like to trade. I like to trade it short. In a long market, short is comes easier in a sense. Yes, long comes even easier in that sense as well. But being short, because you were getting nonstop gap up days. So it's easy to make 20 to 50% on any gap ups because that gap filled. Same for Friday. I told you guys I like the 354 puts. That 355 gap up that we had in pre-market, we came back down, opened not flat, but we opened green. We pushed up to 355, and then it was what gap fill, and those paid nice. That's why it's pretty. If you have a plan, and this is what I always tell you guys when trading QQ, if you can just keep it to scalping to where it's like you have one main focus, like a certain time of day. Me, open is my bread and butter. It's always been my bread and butter with QQ. So if I see a gap up, I'm going to look for the short side easily. I like to play at, especially ODT, playing at the money and about 1 or 2 points out the money is not bad. But for me, myself, if I had $500, I would basically be 250 at the money, but I won't jump straight into it with 250. So if my whole position is going to be $500, I'm starting with $100, depending on the price of the premiums at that time. And especially when it gaps up, premiums become much more cheaper. That's another reason for excitement when something gaps up, because you're like, okay, we're going to get some cheap premiums. Sometimes gap ups can be endless for that whole day. And that brings us to XLF. That was crazy. I definitely wanted to address this. We had a head and shoulders pattern, asymmetrical triangle. And what happened? We closed at 3209, gapped up into our 3247. I was expecting a rejection there. Didn't expect a continuation. Then we started continuing to push even higher, breaking this asymmetrical triangle. So after breaking the asymmetrical triangle, the next target was 3270. After that was 3291 for a max high, which was also a double to triple top, as you can see. Now, depending on this week, it's going to be pretty interesting where we are going to end up. Let me actually bring this back down. There's still a gap that needs to be filled. So Friday, C filled its gap. XLF still has not filled the 3304 gap. I took a loss on the XLF for this week coming up because once it broke that 3247 and then it broke out that triangle, I was like, yeah, you know what? Let's just wait. The next levels are going to be 3291 and max would be 3304, which is the gap fill. Another thing I like to do when I'm looking at charts, I like to see how long it takes for a gap to fill on a chart. Some charts are different. Some charts you find patterns where some take 6 weeks, some takes 5 weeks, some takes 2 weeks. Now we have a couple of gaps here. I'm going to highlight. One here. We had this one here. And then now we have this one here. This gap happened. This was was it January? That's May 2nd. That gap never filled. We created a double top, and that was May 19th. Then we gapped up again, and then we created a triple top, and this was June 2nd. Now the target and the reason for me taking the 46 puts on C, because C already filled its gap. before XLF even got to fill its gap. And XLS has not filled this gap. XLS has hit a triple top. So it was okay. I had to lose one or the other. And the one to lose was XLF here. Made the most sense because XLF still has not filled its gap. Doesn't mean it's going to. It might not, but we have an obvious triple top here. It all depends on how we opening up Monday. Will we open up at 32.70? If we do, we have a potential gap fill from the close of 32.80. We open down below 32.70. We stay under that Monday. Then we have a chance to start filling that gap under that 32.47. So the best trade here would be at the money 33 puts and 32.50 puts with time. So we're going to watch that 32.90 and that 32.70 area this week for XLF. Like I said, C filled its gap. It was the 45.93 gap fill. I thought it had another gap here similar to XLF, but no. But this level is something that we have to know as well. This is this is a triple top two up here. Around 47.17. Getting these lines up for you guys. So C is definitely going to be on high alert this week as well. Like I told you guys, C and XLF, both sides, you can make a decent amount of money. You can hit 20% easily. You can hit 100% easily. Focus on your ranges. You get $1.50 range. You get a 60-cent range. 60-cent range is an automatic 50% when you're playing out the money within 50-cent increments for C. Same goes for XLF. So when one is slow, you trade the other. That's what I've been doing. Next up is the main event is CMG. Yes, this one, the gapper, then the continuation into that 21.38.26. We have a huge gap area coming. Plus CMG reports again this month. No, next month, sorry, July. This is going to be something crazy. Like I told you guys, I like to look at how long it takes for a gap to fill. This previous gap did not fill until, let's see how long exactly. So we gapped up, what is this, 7/26 of last year. That gap did not start to fill until 11/2. 4 months. It took 4 months for this gap to fill. So if I did something similar to this, it would be, let's remove this. Let's duplicate this. Let's move it over into where the gap is at. So if I followed the similar pattern of how long it took that gap to fill, and then I'm going to draw a vertical line here. Now this vertical line is dated 8/23, so that's August. So me myself, I would take 1,800 August puts if there are August puts. If there's not August puts, then you go for September puts. You go for the next month out. Here's where the gap should be filling. So we go to trade. This is literally how I work with gaps. There is no August expiry, so you can do July 1900s. Was they freaking cheap? The bid and ask is the spread is not for the faint of heart, almost 100% spread, $9 by 16.50. We go to September, look at the 1800s. The September is deep. 25 by 34, that's decent. That's a decent spread. So let me add that to the watch list. So you're paying what, $2,500 a contract to $3,400 a contract. Mid around there is about 28, 29. So when that gap fills, that's when it gets interesting. Then there's another gap that needs to be filled as well, but it's kind of hidden. It's pretty small too. So it's good to mark these gaps. This is a 2-hour gap actually. But the smaller the time frame, the more detailed you'll see some inconsistencies. I call them inconsistencies, which gaps are inconsistencies. Because those, they do fill. It may not fill right away, but gaps do fill. I'd rather stay within I don't like to do anything when a gap, like see here, there's no gaps. There's no gaps. Well, there's still that 14, 12, 51 gap. That's showing on the 2D. But since it's a daily chart, we're going to go to the daily. That shows the actual gap. The 2D doesn't show the actual gap from the last ER. It shows that gap. Another gap here. Let's just run it. Let's see how it works. Duplicate this again. Bring it back to this ER. This one took longer. So we know this box is about 4 months, right? So let's extend that. The gap didn't fill till here. It didn't start filling until here. We didn't come into the gap until here. So this one started at 721. Similar to the other one. Literally similar to the other one. And then the gap didn't start filling until 1129. So 4 months also. So this is also 4 months. This one actually is different. So this is a daily chart. So it's actually shorter here. This is longer. This is 4 months. So let's do this. Where is my text tool? Here we go. 4 months. This one was July 27th. It did not start to fill until 11/1. So this is about 3.5 months, let's say. Or less. Let's just go for 3 months from this one because literally July 29th. So automatically right there goes into August. But we're going to go 3 months. Shorter time. So as we do that, look at this chart. We have that gap. And before that, no other gap. See, back then, gaps filled faster. As price advances, it's different. But this was a huge gap. Huge gaps take some while to fill. But if we want, we can add let's add our VPN real quick. We're going to follow suit to how the gap worked, right? So I'm going to do a retracement in this one as well in the VPN, just to give you an idea. from top to bottom. Surprisingly how everything just lines up. Okay. So it already began with CMG, just based off looking at the gap. So I'm going to point this out to you guys. This is why CMG is another one on the list. Check this out. My favorite thing is looking for inconsistencies. There we go. This right here. Remember, this is where it started. Everything started. This is where it started falling. Similar pattern here, literally similar. You can see the head and shoulders. And when you're using VPN, you can see a lot of things you don't see on the actual chart itself, believe it or not. There we go. Let me just move that. You see this big head and shoulders here, then it broke down. We have a similar thing here. We rejected gray area, that gray line, and we're breaking down. Similar, we did it again. Here. These were after gaps, okay? So keep that in mind. You can see where the gap started. The gap started here. And you can see the gap between the gray line and the green line. So let's do a horizontal line going through that. There we go. This one as well. There we go. And similar over here. You can just see the gap in between, that big space. A lot of people sleep on this one, this indicator, but I've been working with it for a while now. A lot of little obvious things you can see here too. The thing about CMGs is all about timing. Early on, timing was horrible. After that gap up, they were just pushing it, just continuing to push it. How these line up. Look at what the 14 SMA is at. The tighter that 14 and the 30, the tighter they get, that's when you know there's going to be a shift too, especially after it's fully extended. Price has fully extended here, similar to this area over here. So I'm going to remove this retracement, clean the chart up real quick, just keep it basic. Pink lines are gaps. This one might be a short one. So if this was 3 months, right? Well, I'm talking total after it filled. I really like to count more when the gap, when price starts to get into the gap. So let's activate that real quick. Let's just bring this back a little bit more. So once price goes into the gap, you already know what to expect. So again, 727 to the highlight that one to 11.2. I think that's 4 months on that one. I feel like these are, yeah. So if this is the same as this one is pretty, see, this one is, this is extended. Like these look exactly the same. Let me do a channel real quick. I just want to see from this bottom here when price crossed. Bring this across the height for this. There. I'm going to duplicate this. I just want to see if it matches. Wow. That's crazy. That is crazy. And when that gap fills and that breakdown starts to happen, Jesus Christ. It's literally the same setup. Yeah, I like this one. I like this a lot. If we don't get a gap down tomorrow already. But 2030 is very important. Still have the 2050 puts for next week. Those are green. It was not following markets last Friday at all. There was no strength in CMG last Friday. So just keep that in mind. I just want to keep it simple as possible for you guys. All right. Everybody has any questions? CMG is going to be very fun, and you guys know how CMG moves. Might get minus 20-point days, minus 100-point days, minus 60-point days. So this is going to be a big focus for me, CMG. Already started in the 2050s for last week. For this week coming up, got in last week. But once this 30 SMA breaks down, it's on from here on out. Look at that. Then they have earnings coming up again. So thank you all for joining. I appreciate you guys. I'm gonna upload this video. I will catch you guys in, well, I'll be on the road. I have to drop my daughter off to the city by 7:50 till she gets to school. The goal is trying to get back literally. I'll be on the road, but I'll probably end up pulling over too to place a trade to make sure that trade's in. I'll see if my lady can do it for me.